Wall Street is camped near record highs, but the Fed just blinked the wrong way, and Kevin Warsh takes the Fed chair away from Jay Powell, and the dot plot flips from a cut to a hike. That's not good for people wanting lower interest rates. And a peace deal on paper, and yet the Strait of Hormuz is still effectively shut. What does all this mean for the markets? It's Thursday, June 18th. I'm Charles Brown, Portfolio Manager with CB3 Financial, and this is your weekly podcast update, and it starts now. The S&P finished yesterday at 7420, down 1.21% because the market did not like the hawkish nature of Kevin Warsh. The Dow brushed 52,000, a fresh record, its ninth straight weekly gain. So the Dow right now is actually stronger than the S&P and the NASDAQ. NASDAQ off 1.1% on Tuesday and also down today, Wednesday, as I'm recording this. But the tailwind under all of this is the collapsing oil price, and that's good. So the market now is seeing that this eventually is going to get done. This peace deal is eventually going to get done. Maybe not the way any of us would like it, but with Brent trading at $78 and West Texas, that's the domestic oil, trading at $76 at 3-month lows, gasoline is back under $4 nationally. So the VIX at 16 is lower than it's been in quite some time. All of that is possible. We do have an interim U.S.-Iran deal reached Monday, as I'm sure all of you know. We do have an interim U.S.-Iran deal reached on Monday, and the signing is set for Friday. That's tomorrow in Geneva, Switzerland. But the Strait of Hormuz is not truly open. Iran is still conditioning passage, charging tolls. I don't know how they're getting away with this. I just don't know how they're getting away with this when we have so many more choices than the Iranians have. It's got to be frustrating to you as my listeners too, but 500 plus vessels are stranded in the Gulf right now. They're trying to clear the mines that the Iranians put down there to try to blow up ships that tried to pass through the Strait of Hormuz. And it's just a mess. The UAE warns full flows may not return until 2027. All right, even with a signed deal. And yet oil is still down 40% from the wartime peak, up around 130. But that's really sentiment. That's not based on supply. But yet sentiment is what we want to see for the stock market to continue to try to reach for new lifetime highs. So yesterday, Kevin Warsh made his first meeting as the 17th Federal Reserve Chairman, and he held rates at 3.5, 3.75. Here's the flip, though, the dot plot, which measures what the 12 governors think is going to be the rate structure a year out. That actually flipped to a hike, all right? And that's not good. It was supposed to be a cut back in March, and now it's flipped to a hike. And why is that? Because the consumer price index is at 4.2%, the hottest reading since 2023, and the wartime energy did the damage, even though crude oil is dropping right now. So Warsh skipped his own dot, trimmed the statement, and reaffirmed that the Fed's target is 2%. Really nothing different than Jay Powell was saying all these years. So the Fed watch is there's about a 61% chance of an October hike, not a cut, an actual hike. Powell, of course, is still on as a governor, and the political angst and drama continues in Washington. And yet, here we are near lifetime highs. We're watching out for you folks. We're making some changes in the programs to adjust for the fact that SpaceX now has traded for 4 days, and it's actually priced at $191. So it reached up to $220, $225, somewhere in that range. It opened at $150.05 last Friday. And of course, that's pulling the market along with it. So we've had to make some weighting changes because, believe it or not, SpaceX is almost 3% of the entire weighting of the S&P 500. At least it was when it was back up trading at $220. And it briefly overcame Amazon as the fourth largest stock in America. So that's what's happening right now. We'll be back with you next week for an update on the podcast here. And then set your clock or set your alarm or set whatever you have on your calendar for Wednesday. That's Wednesday, July 8th. We're having to do it a day early this month because I'll be traveling on July 9. But we hope that you'll join us for CB3 Live, where we will cover each of these topics in more detail. Until next time, I'm Charles Brown, Portfolio Manager with CB3 Financial Group, where we don't just manage your assets, we become one of them. Clear, concise, and committed. See you next time, folks.